Assalamualaikum and hi everyone. Today our group would like to present about a topic which is Introduction to Business Company. Without further ado, let me introduce my fellow group members which are Anis Zati, Nur Athirah, Dayana Fitra, Wan Ashatu Nuha and me, Sharifah Qaisara. So what is a company? Question marks. So company is a business entity that is registered as a company under the Companies Act 2016. In short, company is a legal entity formed by a group of people to operate business by providing goods or services to its consumers.
There are three types of companies that have been classified by the Company Act 2016. The first one is companies limited by share. The second one is companies limited by guarantee. And the last one is unlimited companies. Okay, companies limited by share means its members' obligation to the company is limited to the share capitals, the amount of share capitals. As the example, a shareholder subscribed RM 200,000 of share capitals, but had only paid RM 100,000 of his share capitals. So his liability is limited to the RM 100,000 ringgit of unpaid of his share. So in this case, if the shares are fully paid, shareholders are not liable to the company's debts, and which means shareholders' personal asset cannot be taken by the company to settle its debt. Next is company limited by guarantee. It means that members' liability is limited to such amount as the members undertake contribute in the event in the company being wound up. A company limited by guarantee required to apply its profit or other income to promote its object, and it cannot pay members dividends. The last one is unlimited liability company. Okay, the unlimited liability company is formed on the principles of having limit placed on the liability of its members. It means that the shareholder required to contribute the asset of company to settle its debts. Unlimited liability is actually similar to sole proprietorship and unlimited partnership. There are 5 types of company. Okay, the first one is a public company. The second one is private company. The third one is exempt private company. The fourth one is foreign company, and the last one is government linked company. Okay. First is public company. Public company required to have the words berhad as part of and at the ends of its name. Okay, there is no limit on the maximum number of shareholders in a public company, and a public company can offer its share and debentures to public. Okay. Next is private company. Private company liabilities is limited by shares. The numbers of members must not exceed 50. Okay. Private company have the words Sendirian Berhad as part of its name or at the end of their names. Okay. Next is exempt private company. Exempt private company have not more than 20 members whose shares are not held directly or indirectly by any corporation. Next is foreign company. Foreign company is a company, corporation, society, or other body incorporated outside Malaysia. Okay. The last one is government link company. Okay, government link company is corporate entities that government owns some or all of the share capitals. The company could be
Assalamualaikum
private.
warahmatullahi wabarakatuh. Today I would like to talk about registration company commission in Malaysia, CCM. What do you need is first, name of company, second, status whether the company is private or public, third, register office in Malaysia, fourth, detail class of share and number of share held by each member, which means limited by share. Fifth, amount of member undertake to contribute to the asset of company to one up. And sixth, name, identification, nationally and resident of every director. To talk about Financial Reporting Company Act 2016 and Financial Reporting Act 1997. Section 243 to Section 251 of the Companies Act 2016 cover matters pertaining to the preparation of financial statement. Act requires financial statements to prepare and present a financial statement with all approved financial reporting standards in compliance with the requirement of Financial Act 1997. Record maintenance characteristic of the financial statement prepared by a company. Companies Act 2016 states that every company and director and manager should cause to keep such accounting transaction. Document to prepare from time to time which will be truth and fair. Records need to keep in a manner to enable the transaction and financial statements to be properly audited. Company need to keep within 60 days. Company retain record for 7 years. That's all from me. Thank you.
Both partnership and company form of business has its own advantages and disadvantages in terms of obligation of liability, ad spend in business growth, profitability, control, and creation. Firstly, in terms of its liability, forming a company business would benefit you more since partnership has unlimited liability, which the business liability is not limited to amount or capital invested only. Meanwhile, the liability of a company is limited to its shareholders. Let's say that Abu Partnership Enterprise goes bankrupt. All members including Ali, Abu, Ammar and Badrul might have to liquidate not just the business assets but their personal assets might be affected as well. Next, expanding a company might be easier compared to a partnership because larger businesses are likely more credible and stable. There are more people who can work under a company, which then will lead to a combination of different ideas, strategies, and experience. After that, a company tends to have bigger annual sales because companies usually purchase something or products in a large quantity. By that means vendors and suppliers typically will provide discounts to companies who purchase in a large quantities, which then will result to a company to cut the cost of the products that they offer to the customers. In fact, the greater the quantity, the steeper the discount, the massiver the product, the profit margins will be. Next is the major difference between them is there is no minimum capital requirement for starting a partnership firm. Meanwhile, forming a company business is a lot more complicated as it requires more capital, at least hundreds thousands of ringgit Malaysia. That's why some people may prefer to keep their business small because bigger business means bigger risk to come. Lastly, in terms of control, in company type of business, a director needs to be appointed to rule the company and manage all activities. Unlike partnership firm, who all partners are liable in making decisions in the business. For instance, let's assume that Abu Partnership Enterprise finally decided to form a company business and they appointed Ali as the director. The rest of the members doesn't have the power or ability to interfere, as all power are in the hand of the director, even though the director abuse his power or being irregular or being unfair or being irresponsible.
Assalamualaikum and hi, my name is Athirah binti Rosdi. So here I would like to present to you the difference of element disclosure in financial statement between company business and partnership. Okay, so for the first element is investment, which is asset. For company business, investment in company business known as fund company, which they often partner with third-party distributor to make profit by buying and selling share and property or something like that. And for investment in partnership business, investment would be at least 90% of its investment that are included in financial statement. That are included in the financial instruments such as bond, stocks, and primary income that usually 90% to have financial asset as the source. And for the second element is share, which is equity. For company, equity account do not separate for each stockholder. Instead, equity recorded as a whole amount in the capital stock account under stockholder equity. Total dividend placed in a temporary account called as a dividend account, which is debited when dividend are declared and credited when they are paid. So at the year end, any remaining balance is clear with the offset to retain any. And for the partnership business, equity, each partner has two equity account, which is to record capital and to record withdrawal. The capital account record the contribution of fund with the offset to the appropriate asset. The withdrawal account record the distribution each partner receive. For next element is interest, which is expenses. Board of the director in corporation are in the most legal system required to use their power for the commercial benefits of the company and the members. And for partnership, interest divided among the partner. This interest must be paid before profit and is included in the income statement as expenses. And for the fourth element is investment income, which is in company business, they reinvesting their own profit, which is one primary source of financial capital. Company that getting started may have attractive investment opportunity but few current profit to invest. Large firm can experience a year or two of losses or any low profit, but can find a steady and reliable source of financial capital so that it can continue making reinvestment in tough time. And for partnership, investment gain from a partnership distribution to a partner treated as gain from a sale or exchange of a partnership interest. However, other categories of payment are not treated as being from the sale or exchange of a partnership interest. For example, granted payment are a partnership payment to a current partner for service or the use of capital that do not depend on partnership income. And for the last point is liability. Liability for company is obligation of a company. So there are amount owed to creditors for a post-transaction, and they usually have the word payable in their account title. Along with other equity, liability can be thought as a source of the company asset and also be thought as a claim against a company asset. And for liability, for liability of partnership, partners are often liable for the debt of partnership, and partnership liable only for the debt of a partner in very limited circumstances. Partnership property can be used only to satisfy debt of a partner when the partner was acting in the ordinary course in business or the partnership authorized the partner's activity. So that's it. Thank you.
Element of annual report, we have 6 elements, which is chairman statement, corporate governance statement, social responsibility statement, financial statement, audit committee report, and lastly statement on internal control. Legal requirement in Bursa Malaysia Securities Berhad, listed company have to make additional disclosure regarding the performance of the company. They are required to make a preliminary statement of result within 6 months following the end of the financial year. The listed companies are to issue half-yearly report regarding their performance within 3 months following the end of the half year. In conclusion, through this assignment, we can learn a lot about the legal aspect of company formation and the financial reporting of company. We can also learn about changes from partnership to company and differentiate the element in financial statement between company, partnership, and sole trader.